Okay, it's Friday, December 4th. I think we're coming in, not only to the Christmas season where stocks usually do pretty well, usually the best time of year actually, but we are coming into a challenging period. We're in this between Trump and of course him not conceding and Biden coming in and the Republican Senate looks like it may retain a control, but maybe not. But we don't know that until January 5th. And the Electoral College is not going to make its formal vote till December 14th. So we have a lot of uncertainties. And there's a new stimulus plan just recently, bipartisan, a little over $900 billion. No consumer checks. Hey, come on, man. Now, I don't think they should do any of this myself. I think they've already overstimulated. But that's what the markets and what people are expecting. So this is way less. You got to remember, this proposal, even if it passes, and it may not pass until Biden gets in office in, say, late January, early February, but even if it passes, this is way less than the 2.4 trillion Pelosi was talking about pre-election, and Trump talking similar to 2 trillion or so. It's the Republican Senate that wanted the lower amount, wanted to be more conservative. And they're the ones that are going to be fighting Biden on this if they do retain control. You got to remember this Georgia runoff, it's 2 Senate seats. If they win both of them, the Democrats get a tie with the vote going to Kamala Harris as vice president. If they only win one, McConnell is still, and the Republicans are still slightly in control and more gridlock. So again, a lot of uncertainties here. I think the market is starting to look peaky here. And Andy Pancholi, my co-author in London, he's got a turn point for the 4th, also the middle of December and the end. And I could see a top here, a correction into this electoral college decision, which is going to get heated. And Trump's going to, if he's going to go ape, he's going to go into that, probably just after. We could get a correction in the middle of December, and then we could get maybe one final run into the jolly season towards the end of December, and that may take us a new high, may not, but we are hitting some really important levels here on the S&P around 3720, on the Dow just over 30,200. These are kind of levels that this whole advance hits resistance. So I think we're coming into a top, and it's a question whether it happens now. I mean, it could literally happen if the markets keep edging up today. It could happen later this month. I do not think the market keeps rallying into the first quarter, and that's what most people expect, because we think everything's going to get better. No, I am with Mohammed El-Arian, the only mainstream economist saying the same thing I am. This economy is weak. We've had shocks from the pandemic and COVID. Those shocks are going to continue because we're still hitting. I thought we'd finally topped out November 20th in new cases. No, we just hit new highs again. So it looks like we're trying to top out. There are lockdowns starting to happen in California and other places. So this probably will, but these cases are probably going to stay high for a while. So these are going to continue to cause weakness in the economy, foreclosures, loan defaults, these sort of things, companies going under, small businesses are not recovering like larger business. Remember, I've always said 19% of public companies are zombies, not paying their debt service, interest or principal or both. So I say the economy continues to weaken. Just the job number came in today, weaker than expected as usual. I think this is what we're going to continue to see into the first quarter. By the time the vaccine has a chance to maybe start to move mainstream, second, third quarter, I think we're already going to be in trouble. Remember, our subscribers will know I've been featuring this megaphone pattern in the S&P 500. That says we're in the final wave up, testing it. If that follows through, we're down 42%, down to 2,100 potentially in the next couple of months. And I think that means the last high we'll see in the markets. And I think this is where people will lose confidence finally in this endless, no matter what happens to the economy, COVID or weakness or stock crash or whatever, we just print more money and infinitely more. They printed, $3.4 trillion in a short period of time for COVID, 2.2 trillion fiscal stimulus, supposed to have another 2 trillion, and we'll see what we get. But this is crazy. You can't keep doing this. So I say this thing's about over. and it's time to start getting conservative. We're getting very close to my buy targets around 1% on the 10-year Treasury, but we're telling people buy 30-year Treasury bonds at Safe Haven. Longer duration, starting at 1.6% or so rates instead of 0.8 or 9 for the 10-year or 1%, you're going to get a much better deflation play. And I showed that to our subscribers. And the December newsletter is just coming out today. So everybody, subscribers, should look at that. We start getting serious. Somewhere between now and the end of December, I say we're going to top. And right around here or just a little higher, probably not a lot higher. And then the risks grow exponentially into next year, just when most people think, oh, 2021 is going to be the comeback year. My cycles are the worst combined into 2021, and particularly in the first half starts to hit. So the biggest cycle, and you got to remember this, there's all types of cycles, but there's bigger ones and more powerful for the stock market and for bubbles in particular. A 90-year double 45-year technology cycle is the key bubble cycle, and we are seeing that peaking right here, late 2019, 2020. We already got the first shock. We got more coming, and it's going to get worse. I say 2021 is going to be the worst year you see in your lifetime, and I've been saying now for decades, back to the late 80s, that the worst year for stocks, the low point in the stock market on my 20, 40, 80-year, and now 90-year cycles will be late 2022, give or take, okay? So I still say biggest crash of your lifetime in the next 2 years. Start preparing for it now. I think the clock is running down on what Andy Pancholi and I said way back, 0 hour.